please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
With crude prices topping $78 a barrel, oil marketing companies have hiked petrol prices for 9 straight days. MK Surana, the chairman and managing director of HPCL, joins us now to talk about that. Mr. Surana, good morning. The last time when we spoke with you, you told us that, the gross refining margins could be to the tune of almost $6 to $6.50 a barrel. But at that time, crude was not as high as it is today and the rupee was not as weak. With these two macros deteriorating further, where do you see gross refining margins on an average over the next few quarters?
No, we should still be able to maintain that gross refinery margin because the diesel cracks have formed up. It is almost $16 plus, and the future also is looking good as far as diesels are concerned. MS was weaker earlier. It has gone as low as 8.5 or so, which formed up in $9.5 to $10 range. Even if there is a weakness in MS, we still expect it to be between $9 to $10. So I assume that unless there are substantial increase in the crude oil prices, which may impact the fuel which we burned in the refineries, we should be able to maintain the GRM. Okay,
so that's good. Going on the GRM front, sir. Good morning. Now, I just want to talk also about the marketing margins because with the manner in which the currency has depreciated, and simultaneously this again rise in the price of oil, have you been able to pass on most of this or is there a threat to marketing margins?
No, this is a situation which is developing and we are keeping a close track of it, and there had been the increase in the prices in the last few days, which we have got no choice but to pass it on because the crude prices are increasing and the diesel crack also has increased as far as the rupee has increased. The increase in the crude prices is an impact of number of factors, including the latest one where there is some possibility of hurricane in Gulf Coast of Mexico, which has led to two platforms being shut. There are also news regarding some blockades in Nigeria, unrest, and of course the story on Iran which is there, but Russia and Saudi in the last month has pumped substantially higher crude oil, and the Iran oil has dropped to almost 2.1 million barrels a day. So the story on the crude price is developing and we'll see how it goes forward.
But sir, you were
that they should be in the $75 to $80 range.
Okay, so crude price being in $75 to $80, does that mean that your marketing margins will stay at around 4.5, which is where they were in most of Q1?
No, I had mentioned a number of times in the past we don't calculate the marketing margins the way you people depict it to be. It is a factor of too many things, and it will be misleading to calculate the marketing margins like that.
So can you tell us what the trend in the marketing margins could be, the way you guys calculate it? I mean, what kind of average margins can we expect over the next few quarters?
No, it will be difficult to predict the margins right now because there are too many things which are happening on the crude front, in the dollar front. Dollar exchange rate is an important factor which was not in tandem with the crude oil prices earlier. This time that is the case as well. And the third part is the cracks. For example, in the diesel, in last 2 weeks there was no export from China to Singapore at all, which has led to forming of the diesel cracks. On the other side, the LPG also had some disconnect to the whole story. So it will be difficult to predict, but we will let you know as it comes.